It's the manager's relationship that basically really helps you get access to number of deals, but also be ability to underwrite those deals. Very important concept in VC and private investing is MOIC, which is effectively how many times did you make your money? Did you make 3x, 4x, 5x?
So what kind of investor is this meant for? Because I have a feeling that it might not be for your average retail investor. So what sort of mindset should a person have in order to go for such a venture capital fund?
Absolutely, and you kind of answered the question yourself. It's not meant for the average retail investors. What I mean by that is, firstly, for an AIF, anyway, the minimum regulatory requirement is 1 crore.
Yes.
So SEBI itself has put a filter to say that, hey, this is meant for high net worth individuals, UHNIs, family offices, and institutions. Secondly, as we were discussing, this is an illiquid investment.
Right.
What that means is nobody should invest money that they might need in near future into such vehicles or private investments, because you can't really sell out of them as easily.
Yep.
Thirdly, I think when you're investing in this type of asset class, you need to think of it as your portfolio construction. That you have, let's say, real estate, you have fixed deposits, you have gold, you have public equities, and then a portion of it should go to private investments and venture investments, which is higher risk and potential to provide higher return.
Right.
And that's how people should think about it in their portfolio, that where it really fits.
Yes.
And it's not like that you invest all your money in private illiquid assets. That's not the right strategy, and that's not the ideal strategy. In fact, people should start small and then build exposure over time as they have better understanding of the asset class.
Okay, got it. So when you say long term, it's meant for the long term. How long term are we talking about here?
So typically, a private fund will have fund life of 8 to 10 years.
Oh, okay.
So what that means is when you invest money, the money doesn't go in one go. The money goes over time as the fund makes investments.
Okay.
So it's a tranched investment. Let's say you commit 1 crore to a fund today. They are like in mutual fund, they'll take your money on day one. Here, the fund has not made the deals yet. So as the fund makes deals, they will keep calling money from you up to that 1 crore amount that you committed to them.
Okay.
Now on the other side, let's say the fund life is 8 years. Maybe for the first 5 years, you will not get any money back.
Okay.
And from 6th year onwards and so on, you start to get your money back. So it's typically one should think of at least 8 to 10 year investment horizon when they are investing in such funds.
Oh, all right. So now when it comes to picking the right fund, what factors should the investor evaluate? Like it could be the fund house or the track record or many other factors, especially when it comes to venture capital specifically. So what should they evaluate?
Absolutely. I think in this, while a lot of the factors are similar, because ultimately it's the business of making money.
Yep.
So some factors will remain similar to a mutual fund also or any other fund. But importance of some factors is even higher here than otherwise. As I said, I think the first and foremost is the platform, the fund house, because reputation of that fund house, ability of that fund house to invest in the right companies. We talked about exclusive access.
Right.
Does this platform have exclusive access or not is super important. Like a name like Mirae is very exciting because it's a well-proven, well-tested over the last 18 years platform in India, but also a global platform that has a lot of strength. So that's number one. Second is the team. I think manager is super important here because ultimately, right after platform, it's the manager's relationship that basically really helps you get access to number of deals, but also be ability to underwrite those deals. So the manager, their track record is extremely, extremely important, maybe even more important in this case than a mutual fund because your money is getting locked in for 8 years. The third is the strategy. And I think you need to understand what strategy makes sense for India at that point. And we
Oh.
talked about different vectors of the strategy. One is early stage, growth stage, late stage. That's one vector. The second vector of the strategy is the manager going to invest in one sector, or are they planning to invest in multiple sectors? The third is, will they have a concentrated portfolio, or will they have a very, very wide portfolio? So there are a number of elements that one should understand from manager, their thinking, to see if they want to bet on one particular platform and manager or somebody else.
Okay, so that's quite helpful advice. Now, how should investors think about risk and return when it comes to venture capital? Because, of course, it's very different from listed equity or mutual funds. So, what are the risks, and also how should they think about the potential returns over here?
I think, see, fundamentally in finance, one of the mother of all concepts is risk and returns are correlated.
Yes.
This is a higher risk investment.
Yep.
It fundamentally is illiquid and is investing in the future companies that may become really big or might not play out, right? And we have seen number of examples on both sides. There's one eternal, but there are other companies that didn't work out. So this is a higher risk, higher return investment instrument for an investor. And because typically they are locked in for 7-8 years, they actually should think of multiples of their money, which is a very important concept in VC and private investing, is MOIC, which is
Okay.
effectively how many times did you make your money? Did you make 3x, 4x, 5x? Because
Oh.
that's like an important metric for this industry.
Oh,
And the
okay.
second thing is, in short term, the IRR doesn't matter.
Okay.
Like if you invested in a fund, the first 2 years, the IRR is irrelevant.
Okay.
Because you really should be looking at the IRR in 5th, 6th year of the fund, when the fund is actually starting to mature and what you will actually get in return. But fundamentally, this is in a portfolio construction, it's a higher risk, higher return asset class, and people should expect at least 500 basis points of premium from a normal mutual fund performance.
Now, are there different kinds of venture capital funds, like funds that focus on a particular sector, stage of investing, etc.? So, could you tell me more about this?
Yeah, so the biggest classification is actually, as we talked about earlier, early stage,
Yes.
growth stage, and late stage.
Yep.
So these are, I would say, broadly speaking, 3 categories of funds. They also, and which category of fund you're evaluating, generally the strategy will differ a lot.
Oh.
So if you're talking to an early stage fund, the manager would say that they will invest in 40, 50 companies
Okay.
from the fund, versus for a growth stage fund, will invest in maybe 10 to 15 companies. So the
Okay.
strategy is refined by the stage of investing quite a lot.
Right.
And then there are funds that are focused on sector. That in India there are focused funds that were focused on consumer as a sector. They will invest only in consumer brands. But and now there are funds that are only focusing, let's say, on deep tech. But at least from my vantage point for growth stage, I believe a fund should be sector agnostic,
Oh.
because in India we still don't have enough depth in any one sector, and you are investing over a very short window of 2 years. Sometimes some sectors don't have great opportunities, so you don't want to be bound by a sector. You want to
Yes.
be investing in really generating great returns for your investors, and be sector agnostic, especially for
Okay.
growth stage.
Right, because that's riskier in a sense.
Absolutely.
Okay, so this like, as you said, this is like a completely different ball game from just mutual funds or
Absolutely.
listed equity, and you feel like a bit of a visionary over here also, because you're investing in companies that have future potential and trying to assess which companies have those potentials. So that's quite fascinating. Thank you so much for being here today, Mr. Puneet. It was like very insightful, and you explained everything in a very simple manner. So thank you so much.
No, absolutely. Thank you. And I'm excited, and hope more people get aware about this asset class. And at least it's fun to learn about new things. More than
Definitely.
even if they invest or not. I think
Right.
they should be aware of what's happening.
Yes, definitely.
Thank you. So most of the people still think of कि अच्छा चलो अभी पैसे डालते हैं and एक साल में डबल हो जाएगा. That's not how it works. If you ask a seasoned venture capital investor, most times by the time a retail investor is excited about some trend, it's already really played out.
Right.
So you have to really think about the future, not think about the past.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.